Good day, everyone. Our group is here today to present a comparative financial analysis of three major players in the Philippine banking sector: the BDO Unibank, Bank of Commerce, and Bank of the Philippine Islands. Our goal is to assess their performance across four key areas such as profitability, efficiency, revenue growth, and liquidity to uncover their true financial health and recommend pathways for sustainable growth. So now, let's begin our findings with profitability, which we measure using the profit margin. This metric tells us how much net profit a bank earns for every peso of generated revenue. As you can see on the screen, the data clearly shows BPI leading the pack with the highest profit margin consistently. The Bank of Commerce follows in the middle, and BDO Unibank, despite being the largest in terms of assets and revenue, reflected the lowest profit ratio. This finding is highly critical. While BDO is a revenue giant, its lower profit percentage suggests it's carrying higher operational costs relative to its size. On the other hand, the BPI demonstrates superior cost efficiency, proving it is highly effective at managing expenses and converting gross income into net earnings. Moving beyond margins, let's assess how efficiently these banks use their resources. We gauge this through return on assets or ROA and return on equity or ROE. These metrics evaluate resource utilization and shareholder return. Once again, BPI confirms its financial discipline by achieving the strongest ROA and ROE. This indicates excellent management in leveraging both total assets and shareholder capital to drive profits. BDO maintains a moderate, steady level of efficiency but consistently trails BPI. Bank of Commerce unfortunately record the lowest efficiency metrics, suggesting it generates less income relative to its asset base. This is a clear strategic area that BOC must address. Next, we look at the revenue growth trend. This is a collective positive story for the sector. All three banks demonstrated a consistent upward trajectory in revenue across the analyzed periods. This collective growth points to strong market demand, increasing customer activity, and successful operational expansion. This trend is a positive indicator for the long-term sustainability of the entire Philippine banking industry.
Our final quantitative findings relate to financial risk and liquidity assessed via the current ratio, the ability to meet short-term obligations. BDO and BPI both maintain stable and healthy liquidity position, indicating a low risk profile and high capacity to meet immediate financial needs. The primary liquidity concern in our analysis was with BOC, which had exhibits a current ratio below 1 in early periods. This signaled potential short-term challenges. However, it's crucial to note that recent data shows significant improvement, indicating that BOC has successfully strengthened its immediate financial stability and it's on path toward recovery. Based on these findings, we have distinct strategic recommendations. First, for BDO Unibank, the core focus must be on improving cost efficiency. The lower profit margin despite high revenue point to bloated operational expense. BDO must review international cost control, streamline operation efficiency, and optimize expense management system to convert its massive revenue into stronger net.
We turn our attention to BPI, the efficiency leader. Given its profitability and efficiency metrics, the recommendation is to sustain market leadership and expand growth. BPI should continue its successful trajectory by expanding digital banking services, investing strategically in customer acquisition, and maintaining its stringent cost control measures and portfolio diversification efforts to retain its significant competitive edge. Our general recommendation for the entire sector are threefold. Continue leveraging technological innovation to further reduce operating expenses across the board. strengthen public reporting and transparency to reinforce investor confidence, and always maintain robust liquidity buffers as a safeguard against unpredictable economic downturns. In conclusion, our comprehensive analysis indicates that the Bank of the Philippine Island is the strongest overall performer in terms of profitability and financial efficiency, positioning it as the most stable and well-run institution among the three. BDO remains an indispensable revenue engine that must improve cost control, while BOC is showing recovery but must prioritize efficiency to complete fully. By addressing these specific areas, all three institutions can enhance their stability and ensure sustainable growth in the dynamic Philippine banking industry.